Hi, good morning, everybody. This is Chris with BNFX with your New York Open analysis for the 17th of February. Thanks for joining me here today. So really, the markets have just been crazy the last 24 hours. It's really headline trading right now. I mean, as more comes out from Ukraine and Russia, it's just sending the markets all over the place. So, your typical fundamental moves really are much riskier right now than typically. So overnight here and during the London Open, there was reports of shelling in eastern Ukraine, meaning live fire. So the market just went all over the place as they're trying to confirm it. And some news that I'm finding out now, Russia is really getting aggressive. They kicked out the number two diplomat in Russia. So they're playing tough. And one other comment from Russia was their security demands kind of are a whole package. So they're not gonna let the U.S. pick and choose. They want them all. So really the consensus right now that I guess I'm anticipating is Putin probably made a deal with President Xi not to attack before the Olympics end. So that's the 20th. So we're probably looking at a couple more days before we see some type of invasion. But based on kind of the aggressiveness of all parties involved here, it looks like things are going to get tough here real quickly in a couple days. So just keep that in mind. Safe haven bids are going to be something to look at. In terms of market appetite right now, the one piece of news that I did have, from the FOMC minutes yesterday, the markets kind of reacted with a lack of hawkish surprise. So I think you'll see the U.S. dollar a little bit more subdued going into the March FOMC meeting. So keep an eye on that. Japanese yen and Swiss franc are still fundamentally negative, but once again, with the headlines here, you can see some safe haven bids, and the euro is definitely not a currency I would invest in right now. It's just too volatile. Like I said, I mean, it seems like this military standoff is going to last, and that's going to impact the euro for sure. So euro yen trades might be good. Euro dollar trades might be even a little bit better. The one currency I think is still going to be propped up a little bit is going to be the Canadian dollar, just with its correlation to oil prices. It wouldn't be on a headline. So if some headline of a skirmish comes out, the Canadian dollar is going to get hit. But I think in normal circumstances, the Canadian dollar would be a good currency to play on. One other thing to keep an eye on too would be the Australian dollar, just because it's tied to mineral exports and mineral prices. And if you see this war happen, there's definitely going to be a little bit more of a demand and less supply for minerals. So you could see the Australian dollar get propped up a little bit more than normal once the dust settles. So just something to keep an eye on. But for today, like I said, I would just keep an eye on the headlines, guys. And, I would probably sell the euro just because I don't see a lot of positive news coming out today. So that would be where I'd be looking at, with safe haven pairs. So any questions, hit me up in the room, and you guys have a good day. Good luck trading, and stay safe. Protect your balance, protect your risk, and you'll come out okay. Thanks.